TFSA is the tax-free savings account. It doesn't, whereas an RRSP saves you tax today, a TFSA doesn't. You're investing after-tax income. So the benefit is, it's like the opposite of an RRSP. You invest in a stock portfolio or ETFs or whatever it is, and the growth in, or the capital appreciation, the growth or the dividends, the interest, whatever return you're getting on those investments is always tax-free.
Okay.
And it can be, it's like $6,000 a year right now that you can contribute to your TFSA. And just keep in mind, like with RSPs and TFSAs, like we hear clients say, "Oh, I bought some RSPs or I bought some TFSA." It's the investment choice is separate from like making that contribution. So you can invest in whatever you want. Use a financial advisor, or wealth planner, or Wealth Simple, or something like that to make those investment decisions. Just from a tax perspective, though, you invest. Say it's like dividend paying stock, like a midstream pipeline company or something like that. It's paying 5% dividends. You can use those dividends to buy more stock, and that's like really compounding interest. And so if you do that in your 30s and in your 60s, you can then switch that stock repurchase to start paying out dividends, and that's cash flow after you retire, and that's really tax-free cash flow. Another, I guess, perspective is you can buy, if you're taking a gamble on like a risky stock that might go 10x or something like that. If you do that in your TFSA, that's a huge amount of capital appreciation that's totally tax-free. The downside is if you lose everything, you don't get to use that capital loss. Some schools of thought are like just invest in interest-bearing, steady income-producing assets in your TFSA. Other school of thought is take your risk in your TFSA.
Go for it.
Go for the home run.
So between these two, RSP and TFSA, they're just kind of types of accounts, but within them you can do different things. Like you can invest, or you can just directly save as well, can't you?
You can put it into a high-interest savings account or something like that if you have no risk tolerance.
Are there any, I guess, downsides to the TFSA, or anything that can you over contribute to it as well? Like anything like
definitely.
That?
With both of them, you just want to keep, before you put in a big contribution, just know where your limits are. Right now it's like 63,000 and change or something like that you can contribute, because it just, like Stephen Harper started it in 2009. And
so if you've never put money in, you can catch up with that 63,000 everyone's got sitting aside.
As long as you've been eligible
Yes.
for all those years. And I guess I'll just make a note on that. Like, yeah, you're not accumulating TFSA until you're 18.
Yep.
And if you're a non-resident, both of these they're considered trust accounts. So if you've been Canadian and then you've moved somewhere else for work, there's a lot of guys that go to, or a lot of people that go to the Middle East, and then there's no income tax over there, so they cut their residential ties here. So they don't pay tax in Canada. And when they do that, all the money they have in their RSP gets taxable. And you have to be a Canadian resident to have money in either of these accounts.